What's up, Empire Builders? Welcome to another video. In this video, we're going to talk about Treasury yield curves again. We're going to talk about yield curve percentages and the latest revelations there. Okay, so tune in. If you like this sort of stuff, click the like button. If you're brand new, this is a brand new channel that we're creating. Show us some support. Click to subscribe. Hit the bell notification. Let's dive in. Okay, so the 30-year dropped below 2% for the first time in a long time, apparently. Ever. Oh, I'm sorry, ever. Let me correct myself. First time ever. Key yield curve inverts to worst level since 2007. So that would be the 2-year and the 10-year has inverted once again to the worst level since 2007. The yield of a benchmark 2-year Treasury note more sensitive to changes in Federal Reserve policy fell to 1.5 to 6%, 5 base points above the 10-year, which is at 1.476 after closing inverted on Monday. This means that you'll get paid more for the 2-year than the 10-year. That's all that means. Before August, the last inversion began in December 2005, which is 2 years preceding before the financial crisis. So yes, more conversation and dialogue around this potential future financial crisis, which we'll also talk about. The spread between the 3-month and the 10-year note, the Fed's preferred inversion metric, slumped to negative 52 base points, its lowest since March 2007. 30-year, dropped to 1.955% and is poised to close below the 3-month for the first time since 2007 by fixed income traders as an important recession prognosticator, making an unusual phenomenon as bondholders receive better compensation for short term. Okay, and in this chart, it actually took me a second to realize that they're carrying down the blue is the 30-year, the yellow is the 3-month, and the red is the 2-year. And so here we have current July 27th and August 2018. So we're looking at rates versus inversion and crossings here. Okay, so interesting graph. It's kind of weird that they mapped it like that, but I don't think there's a better way to do it. So yeah, I like it. This is pretty poorly written here, though, because on this channel, we've gone through the inversion data from both Bank of America, Merrill Lynch, and from Credit Suisse. And this isn't, they could have just put this better, okay? So they're basically saying that, for the most part, a recession does occur from the inverted yield curves, which, again, if you've been following the channel, following the information that we put out, we've been tracking this data and following this data to the best of what's publicly available, and this could have been written a little bit better, but certainly validating that a recession has a great chance of being here a year and a half from now, and I would agree with that notion. Absolutely. So, all right, they fire sailed off some $40 billion in 2-year notes at a high yield of 1.516. 47% were sold to central banks. So what I want to wrap up on here with this video, just real quick when talking about this update, is that the data is saying that there's a chance of a recession happening within 3 months, and then some of the data is saying within 12 to 22 months. So that does give you a window if you do want to play this game, if you do want to get into these markets. That is when that 3-month and 12 to 22 months is when we saw a S&P top. So essentially the all-time high or top of the market. All right, so if you're following data just for data's sake and you put together a risk to reward plan on that, then that is a viable move for you to absolutely make. I will say, regardless of if you think this is going to happen, if you think this isn't going to happen, it is in your best interest to plan. It is in your best interest to plan in 2 fronts. A way to preserve purchasing power, which undeniable, metals, and a way to create cash flow. This is with online businesses. This is with opening up your own Shopify store, taking over somebody's store, learning digital marketing, opening a social marketing agency, the gazillions of ways you could make money online, or you could go offline with rental properties, cash flow businesses, and go that route as well. As long as it is something that you can assume is going to stick around even in a recession, like housing is a simple one, because if the recession does hit and we see a pullback from these market tops that we're seeing in real estate, then if people are losing their house, this is unfortunate, of course, so don't think that because I'm talking through this so easily that I think nothing of it, but if people are losing their house, they will need to rent. And so the rental market will once again boom. And in a market that we're in right now, which is super healthy, new home buyers aren't the same as renters as well. Some people don't want the responsibility anymore of a 30-year mortgage and they want to rent. So no matter what the market, rental is always hot. And especially in these bigger cities, in these up and coming rural areas that are turning more metropolitan, rentals are very, very hot right now. So if you've got any sort of pulse on the real estate market at all, which I think is fairly easy to get a pulse on, take you a couple weeks to catch up, but you'll see that rental is still hot and will be hot, okay? And that is a cash flow driven business. And you can definitely get yourself into position with that. And I would say the third thing is to get yourself into position with cash flow or trade lines that have already been established. You have working relationships with these banks and these creditors so that if opportunity comes, you're able to leverage those trade lines without putting yourself into an over-leveraged position and be able to maximize and capitalize on these opportunities that might come your way. During a recession, everyone is thinking, how much worse can it get? How much worse can it get? Just like when a stock goes down or when Bitcoin goes down, and it crosses over a key level, nobody's looking at, should I be buying right now? They're looking at, how much worse can it get? How much more blood is going to be in the streets? And that's why you have to be able to discern and look between that and be able to see that there's still going to be a ton of opportunities and there's still going to be a lot of different ways for you to make money. And that is really when a lot of guys go shopping. That's your Robert Kiyosaki's, your Warren Buffett's. When there is blood in the streets, that is when they start to go shopping at a severe discount. And they're already on the sidelines with cash. Your Gary Vaynerchuk, same thing. If you've been following him for any length of time, he's sitting there with a pile full of cash right now because he knows that if something does happen, there's going to be a wild amount of opportunities, not just in the stock market, not just with real estate, in every single sector. And those that are ready to jump have the balls to do it and get the timing decently right. We're not looking to grab bottoms, but get the timing decently right. You will profit very well. All right, my friends, that's it for this video. Like, subscribe, hit the bell notification, share it around with your friends. Please help us grow this channel. Thank you so much. More videos coming soon. Bye.